Hey, welcome to the exchange. So this article came out in Bloomberg a few days ago. Is China cuts mortgage rates to counter collapse in home sales? So they actually have had a massive decrease in home basically values, also home sales overall. We're starting to see it a little bit in the U.S. now. We're starting to see kind of downtick, basically a softening of the U.S. real estate market. But in China, it's way worse. They're well ahead of us in the real estate kind of collapse they've had. But yeah, if you scroll down here, you can actually see the actual cities themselves. So this is the actual property. So this is basically home sales, like total volume and sales in yuan right here. So I mean, it's not even the current lockdowns. It's been collapsing for quite a while. So top 50 cities. I mean, you can see right here, really the peak for them was roughly around kind of this looks like May 2021 timeframe. I mean, since then it's been almost straight downhill. I mean, they're at all-time lows right now with the lockdown. So I want to show you this chart as well too. So what this chart shows is basically Chinese home price appreciation year over year. You can see right now its last reading is negative 9.06% to the downside year over year. It flipped over in the December-January timeframe. Basically when Omicron hit, it was pretty bad. But I mean, they've been sitting on a real estate bubble for a while, so it's not too surprising. But the rate of negative change is really the kind of shocking just to overall, around the world. It really peaked up here in May 2021 at 12.6%. I mean, it's been on a decline since then, but really the flip actually was been surprising. But I'm gonna zoom out real fast. So this is a 10-year chart all the way back to what 2012 timeframe, so you can get a perspective. I mean, it's just a massive decline. So they had scares in 2017, 2014, 2015, but I mean, this the rate of change on this one is so dramatic versus anything else. It really has the Chinese central bank very nervous, and that's why they're about to print heavily to basically prop up this entire kind of real estate bubble they have right now, and potentially make it even bigger. So that was a real estate chart. I pull up right here. This is the Chinese retail sales year over year. It looks very similar. It's a little bit lagging versus the real estate chart, but look at here. I mean, April 2022, a negative 11.1%. Now, this is predominantly from lockdowns. This is not quite as accurate as a real estate chart, but as you can see, even pre-lockdowns, I mean, it's been declining really in the fall and the summer timeframe, going from like literally last summer, 12.4% down to like literally right before Omicron hit, 1.7% growth, and then obviously it really happened in February, March timeframe. Really had that peak kind of like decline. I mean, it's been very dramatic. Zooming out to the 10-year chart, I mean, it's just dramatic change. I mean, they've been steady growth. You see this, Chinese, always consistent growth. It's been very steady, over the 2010 timeframe. Obviously, COVID hit, you had the big drop and the big kind of rebound spike. But I mean, now it's dropping absolutely hard. You're basically losing the entire retail spending out there. And the big fear is it heads, down to almost like the beginning of COVID levels in March 2020 timeframe. But again, this is why the Chinese central bank is so nervous, because the real estate bubble they have right now, as well as lack of consumer spending, I mean, it's going to absolutely destroy the currency and the economy if this lasts long term. So I want to peek at this as well too. So this is the US dollar Chinese renminbi, basically foreign exchange spot price. What all this means is for every one US dollar, you get 6.73 renminbi, which notice a change here. Notice basically mid-April timeframe, I mean, this is absolutely rocketed up. Basically, the Chinese currency has devalued versus the US dollar, which the US dollar has shown remarkable strength in the past few months or so. But again, this is a massive change. And this is really what just shows you all those fears, all those anxieties, both on the real estate side and consumer spending side. So, I mean, if they don't open up successfully, have basically a broad opening, and the market basically recovers, quickly, etc., I mean, this can get very bad very fast for the Chinese economy. Hey, but that's China, really. I mean, for the U.S. side, I don't see that much going to happen. There might be some lagged effects here, but really two things I'm going to see right now is much cheaper consumer goods. So with a strong U.S. dollar, China, and basically in a recession right now, we'll see what happens with that. It should make a much cheaper overall imported products from China, which is bad for U.S. manufacturers, but good for U.S. consumers. Also, number two, I'm seeing capital flight, though, too. Basically, flight from the yuan or renminbi, basically from China to the U.S. dollar itself, both in real estate and just overall pure commodity prices you see right now. Hey, be sure to sub right there. Also, be sure to like the video. Also, drop your comments. What do you think is going to happen with China and the U.S. economy overall? But yeah, that's the exchange.